Welcome to our call tonight. My name is Alvin Curry. We are beginning our training call for January the 26th, 2017. Tonight we're going to do our tax training, our common tax deduction training. We're going to talk about three of these different deductions tonight. We're going to go through this pretty thorough. We're going to do it from the position of teaching a brand new person. So if you are brand new and you just recently joined MyEcon, you should be able to follow us tonight on this call. Right now, what you should see on your screen, if you are on the webinar, you should see presented by the Millionaire Society, EVP Infinity, Alvin Curry, a phone number, and an email address. That's what you should see. Now, if you are not able to see the webinar, go to your website, log into your website. When you log in, that will bring you up to what's called the Business Management Center. You simply go in the middle to the set right in the middle. You go there and you scroll down to Training Manual. Open up the training, there'll be a drop-down menu. That drop-down menu will have document 802. All you need to do is open up 802, document 802, and go to page 23. We're going to go through page 23 through page 38 tonight. Now, I have already opened that document up on page 23 for those of you that are following along with me right now, and it says Tax Training Record Keeping Guide. We're going to go through this in thorough detail over the next 2 or 3 weeks here. Going to go through 7 different tax deductions that you can use as a business expense. We're going to go through our cash flow strategist, cash flow manager, all of that over the next 2 to 3 weeks. We cannot do all this in one night because it is too much to go over in one night, so we break it up into several different classes. I want to explain this to you tonight, ladies and gentlemen. I have been in business for the last 30 years. I started out in the financial service industry. I've worked a lot in that industry. I am, by education, I went to college for accounting. Now, from that being said, I'm not an accountant. I do not do taxes. I'm not a tax professional. I don't do my own taxes, and I have not for many years. While I think I could do simple taxes, I have no desire to do taxes. That's not what we're attempting to do here tonight. We're not attempting to help you get to become tax experts and do your own taxes. We recommend that you use a tax professional, which is what I do, to have your taxes done. Now, we're simply trying to educate you on what's called record keeping. See, here's the thing. We can do nothing about what happened to your taxes in 2016. So if you join MyEcon with some intentions, no matter what someone told you, is that we could help you with your taxes 2016, nothing we can do about that. Your taxes 2016 is already over. Now, if you were in business with us in 2016, and if you followed these principles, oh yeah, we can help you on that. But if you join, let's say in December, as did many, many, many people, with the intention that we were going to help you with your taxes for 2016, I'm sorry to inform you that's not true. However, for 2017, this is January the 26th, we can do a lot to help you with your taxes. We can help you with minimizing the taxes you have to pay. So I want you to understand, your tax professional job is to file your taxes. They can give you tax advice if they wish to, but really you took your taxes to be filed. Your job, though, is to keep good records. Your job is to show up at their office, wherever they are, with your records in hand. And if you keep good records, it's going to help you to save a lot in taxes. So there are hundreds of deductions. We all of them this week, anytime during this session. We're going to get into 7. But if you'll understand these 7, for the vast majority of everybody that's in MyEcon, this will help you lower your taxes significantly. For the rest of you, you might want to look into other tax deductions. But if you understand these 7, it'll help you understand the others really, really easy. Now, we are going to do an entire night on record keeping, so I want to do this tonight. Second thing we want to, gentlemen, is we must have a profit intent. You should not be in our business and never try to make no money, because people say this stuff all the time. You ain't got to sell nothing. You ain't got to do nothing. You can just do step one and all that. And they call that income shifting. Listen to me well. That is not true. You do have to have an intent to make profit. So I'm going to get into all of this stuff as we go through these trainings. You're going to say, well, now, wait a minute. Now, I told them I didn't want to sell nothing. You have to, and what kind of business can you be in and you don't sell anything? So I don't know of any type business, a service, you got to sell yourself, you got to do something. But it's not saying that you have to go out and build a mega business and do all the stuff that I do. You don't have to go out and recruit people, but you do have to attempt to make a profit in this business. Okay. Now, there are some business expenses that you use partially in your home and partially in your business. We're going to explain to you how you can use those and how you can write off the parts you use in your business. Okay, so we're going to get into this here of what we're going to do tonight. All right. Now, your business have to be what they call ordinary and necessary. An ordinary expense is one that is common and acceptable in your trade or business. An ordinary expense is something that's common and acceptable. For a lawn service person, buying gas for their lawn mowers and weed eaters would be something that's commonly accepted in their trade or business. A necessary expense is one that is helpful and appropriate for your trade or business. A necessary expense could be advertising. You don't have to advertise in that business if you don't want to. But advertisement can be necessary because it is helpful. It helps you get more customers. So, business versus personal expense here. Generally, you can personal living or family expenses. However, if you have an expense for something that is used partially for business and partially for personal use, divide the total cost between business and personal. You can deduct as a business expense only the part that meet the general business deduction rule of being an ordinary or necessary expense. We will cover one of those tonight, and we'll talk about more of them as we go through this training. We're going to talk about 3 tonight. We're going to talk about 4 next week. We're going to talk about car and truck expense. That is a biggie for anybody who has a job and they drive back and forth to work, or if you're in a business where you are a sole proprietor, driving your car and truck back and forth to work is a biggie. If you have a car note, then of course interest on that car is partially deductible if you drive it partially for business and partially for personal use. Communication, your cell phone, your cable TV, and internet, these things can be deductible partially or fully based upon how much you use them in business. Meals and entertainment, eating out, all of these things. Your Super Bowl party that you're going to have next weekend, we will cover that next week before the Super Bowl, but I will not cover it tonight. But I'll tell you how to write your Super Bowl party off in time for the Super Bowl. Travel. If you happen to be traveling to Houston for the Super Bowl, I can show you how to write that off as well. And then, of course, paying your children or spouses to work in your business for you can become huge deductions of business expenses for you. And then depreciation. You can write off that big curved string. They ain't flat no more. You got them curved now. You pay $1,000 for smart TV. You can write that off. You can write off cars and computers and things like that, whether you use them fully in business or part-time. Ladies and gentlemen, these are the 7 things that we're going to work on in this session. Again, we're not trying to make you a tax preparer. We're trying to teach you these 7 things, how they can be used in your business as tax deductions for business expenses, and with proper record keeping, and with proper attempts to make a profit in your business, when you do these, and now file taxes on that, this can help you save thousands and thousands of dollars on your taxes. Page right now, 25. Here's the deal, ladies and gentlemen. We're step 3. Step 3 talks about car and truck. Now, I'm going to go here and I'm going to read this after I get finished here. But I'm going to read what step 3 says, because I want you to understand when you're in your training manual, every person that signed up in MyEcon, go to your MyEcon website, because sometimes there's confusion about what website I go to. You need to go to MyEcon and log into your MyEcon website. You were given a MyEcon password and a site when you enroll. If for any reason you do not know what that is, then you need to call our corporate office on tomorrow. They're in off from 10 to 7, and they'll tell you. I can't tell you what it is tonight, but they will tell you how to get to your site and how to log on to it. When you log on to your site, you go to, it comes up to what's called the Business Management Center. From the Business Management Center, you go to Documents. Documents will take you to the training manual, and you open it up, and I am in document 802. I'm now on page 25. Car and truck expense. Section on page 27. On page 1, that's Roman number 1, 28, read the outline box under transportation. Turn to page 29 in the same section, read the standard mileage box. On page 30, read the first 2 paragraphs of actual expense. And page 31 and 32, read the entire record keeping section, which we're going to do later on because we're not going to get into record keeping tonight. Now, this is just the steps on what you should do. When you get to these pages, it's telling you what we want you to read. Step 4 talks about, it tells you on page 34 through 36 what to read. We have an outline for you. Step 5 is communication expense. That's on page 37 and 38. We're going to show you how those work as well. So let us now go to our very first one. Car and truck expense. Now, ladies and gentlemen, it is very important that you take notes. If you're not looking at the screen, it's very important you take notes. If you are, because I'm going to go through so much stuff here, and because I'm talking continuously, you're not going to have time to ask questions right now. But if you take notes, and when I take the time at the end to ask for questions, you can ask me any question you want about what we're talking about, and I will answer. So you need to make sure you follow along with me. So right now I'm on page 27. As you can see right here at the top of this page, you see car and truck expense, where you see publication 463. So I am going to read publication 463 tonight. Now, if you have someone who does your taxes, who say that what I'm telling you is not true, not that I'm afraid to stand behind what I say, but ask them, have they read publication 463? See, right here to the left it says Department of Treasury, Internal Revenue Service, publication 463, travel, entertainment, gifts, car expense. It does not say MyEcon. It does not say Alvin. So if someone says this is not correct, simply ask them, have they read this? So I'm looking at right now page 28, figure B. When is transportation expense deductible? I want you to look very carefully with me. Transportation expense, it has home right in the middle. Shows a picture of a house, and then it has an arrow going straight across, says regular or main job. It has an arrow going back to to the home. If you look at that arrow, it's a two-way arrow, and it says never deductible. So if you drive your car back and forth to work every day, it is never deductible, no matter how long you drive it. And so many people, we live here in Atlanta. There is thousands, if not millions of people on the road daily. There is not a morning I can turn the TV on. I don't turn it on every morning because I just don't really want to hear stuff. But there is not a morning I turn the TV on. The traffic is not bagged up everywhere around this city. It is from every one of the major freeways headed downtown Atlanta. People driving 30, 40, 50 miles to get to their job one way. They sit in traffic for hours, many days, if there's any kind of rain or accident thing. And that's never deductible. So you are going to have this expense every day, no matter what you do, ladies and gentlemen. If you work that job, you go back and forth. According to IRS, publication 463, driving back and forth to your job on a daily basis is never deductible. However, if you leave your home and go here to a temporary work location, I am going to say to a convenience store somewhere near your subdivision. And now you stop in at the convenience store, you stop in at McDonald's or wherever and get you a quick cup of coffee or breakfast. If you pass out a business card or two, talk to someone about one of our products and services. Attempt to solicit them as a customer for one of our nutritional products. Attempt to give them a package of our coffee. Since you stopped to get a coffee, they just said, look here, we got some great coffee. Would you like to try a couple of mine? You can get samples of coffee and pass them out. Now when you do that, you are solicited here for business. This becomes your temporary work location. But you do have to stop. If you just go straight to your job and straight back, let's be clear, you do not get a deduction. But if you stop and make this a temporary work location, pass out a business card and say, can I get you to listen to a call about income shifting? That's a solicitation. Can I get you to try my daily ultimate? That's a solicitation. Can I get you to try my coffee? That's a solicitation. You would like to buy some identity theft? Pass out a brochure. That's a solicitation. Would you like to try roadside assistance? That's a solicitation. Now, ask them if you could for contact information. Sometimes they will, sometimes they won't. Many of you have been sitting at service stations or at convenience stores or somewhere else, and somebody say, can I give you one of my flyers? That's a solicitation. Now you leave there and drive to your job. You will notice it says always deductible. And you leave there in the evening, go back to that store again, that location or one similar, stop and prospect again, and you say it's always deductible. Now here's the thing. Do you want always or do you want never? See, if you don't want to change your behavior, then I'm sorry to tell you, you can't change your results. Because people quit and they say, it didn't work like I thought it worked. Well, I don't know what they thought. I could get in, it was going to change, I wasn't going to have to change. Ladies and gentlemen, if you want something different, are you sick and tired of what you're getting? Well, you must be sick and tired of what you're doing. You can't keep doing the same thing and say, man, I'm praying to Jesus he give me some new results. It works that way. It don't work that way. All right, so now need a box. Box. When we're on the page, let's read this. We're going to read part of it. I want you to go back and read all of it because in the interest of time, we're not going to have time to read all of it. This chapter discusses expenses you can deduct for business transportation when you are not traveling away from your home as defined in Chapter 1. These expenses include the cost of transportation by air, rail, bus, taxi, etc. And the cost of driving and maintaining your car, which we're going to focus on. Transportation expenses include the ordinary and necessary costs of all of the following. Get it from one workplace in the course of your business or profession when you are traveling within your city or general area of your tax home, visiting clients and customers, going to business meetings. You join MyEcon, you have business. You might go to what we call a home presentation, visiting clients away from the workplace. Get meetings. Okay, get it from your home to a meeting workplace, temporary workplace, where you have more than one regular workplace. These temporary workplaces can be either within your area, tax home, or outside. Okay, transportation expense do not include expenses you have while traveling away from your home overnight. These expenses are on the travel, so we'll talk about those later. So this is driving around. Here I live in Atlanta. Some of you heard Atlanta. It does not include area else. Let's look at standard mileage. See, you're going to be able to, for this mileage you're driving around Atlanta. I noticed someone said they was on in Houston. I noticed someone said they was on in California, someone in Arkansas, someone in North Carolina, someone in Ohio. Whatever city, metropolitan area you're driving around in. And if you happen to be driving around in the rural, it all works the same way. You get to choose either standard mileage rate or actual expenses. Let's take a look at what you do. Okay, you may be able to use the standard mileage rate to figure your deductible cost of operating your car for business purposes. Now, this form has not been updated because right now the new form is not on the website. Right now, we're doing 2016 taxes. They have not put the 2016 form out there, but I can tell you what it is. For 2015, the standard mileage rate for operating your car for business was 57.5 cents. This year for 2017 is 54 cents. 54 cents. Okay. If you use the standard mileage rate for your car for a year, you cannot deduct the actual expenses for that year. You cannot deduct depreciation, lease payment, maintenance, repairs, gas, including gas taxes, oil, insurance, vehicle registration, fees. Now, that's what you can do on actual mileage. So if you were up here in this picture and you were driving like some person is back and forth to Atlanta, they drove 50 miles. Well, this convenience store may be 2 miles to their house. I'll say 2.5. Just to make my math easy, then I'm going to drive the rest of the way here, which is now I'm going to drive, if I take from 50 miles and I take off 3 miles here, 2.5 miles. So I got 50 minus 2.5 miles. That leaves me 47.5 miles. If I drive back to that same general location in the evening, I got another plus 47.5 miles. I got 95 miles. If I take times 0.54 cents, that is a $51.30 deduction for that day. Now, that is mileage. If I did that time 5 days a week, I would have a $256 deduction for the week. If I did that time 52 weeks, I would have $13,338 deduction on my car for just driving it back and forth to work. If you get that deduction, you are going to have to stop and work along the way. You cannot just get in your car and go straight and forth to work. Let me take you to actual expenses, because you may be able to get a larger deduction if you use actual expenses. Okay? All right. Here you have actual expenses on your car. Actual expenses. If you do not use your standard mileage rate, you may be able to deduct the actual car expense. If you qualify for both methods, you may want to figure your deduction both ways to see which way that gives you the larger deduction. So what are some of the actual expenses you can take? So now again, if you're not using mileage, you can take depreciation on your car, your tags on your car, gas and oil, tolls, lease, payments, insurance, garage, parking fees, registration, fees, repairs, and tires. You can take those deductions. So now, depending on what type of car you drive, you may be driving a very expensive car. And we're going to show you this a little later on. Now, what would happen is if you're driving a car and you think on all of these different things you got here, you're going to spend $20,000 in the course of a year. You track all that, you got $20,000 you spent. If you drive your car 75% of the time for business, now you would take 75% of those actual expenses, and that may, you'll get a $15,000 deduction. See, the other way, when you did, I tracked, I said, okay, if you do it this way, you got a $13,000 deduction. But now, if you got a car that you're going to drive, and you did the actual expenses on it, and you're going to spend $5,000 operating that car that year, but you could get $13,000 other way, you would want to take mileage. Because there are some cars that, and I don't want to pick cars, but some of these really small cars, they get fantastic miles, and they're not very costly. However, if you're driving a big SUV that's burning a lot of gas, and it's a very costly vehicle to run, you might want to do. See, you have to decide that, you and your tax preparer. But if you keep records for both, then you will get to make that choice at the end of the year when you talk to your preparer. Now, when we get to the record keeping section, it's going to be easy to see how to keep records on both of those. It's not hard. So I'm on page 30 right now, and I'm looking at actual expenses. So again, I want to go back to this because what happens is as we look at this diagram, on our home, you must stop and attempt to do business. When you attempt to do business, you're trying to get a customer to buy something from you. I'm sorry if somebody told you you don't have to do nothing. They misinform you. I'm not going to misinform you. I am recording this because what someone is going to say is Alvin said I didn't have to do nothing. So I record this so you can go back and train on it. And when you say I told you you didn't have to do nothing, we're going to go back and listen to this recording and see if I said that. Because I never tell anybody that because that's absolutely not true. If you saw it on Facebook, you have to make a legitimate attempt and earn the profit. So if you stop and talk to people every day, the IRS and me and everybody else know that everybody going to say no to you. Everybody not going to say no to you. I've been in sales now 30 years. There's no way you can stop every day of your life and never make nobody never want to buy nothing you got. That will not happen. So you're not going to run down the road every day and never make a sale. Doesn't mean you're going to make a profit right away. But the more you attempt to, the better you'll get. And if you do this, it will save you thousands of dollars a year on your taxes. This is one of the best tax deductions we can talk about for anybody that has a W-2 job, for sure. Now, why did I say that? Because if you are already in a 1099 capacity, you're probably already getting this deduction. So it didn't really, this ain't something other that's going to significantly change for you unless you was in a 1099 job as a contractor and didn't know you could take the deduction. Then something significantly changed for you. But if you already are in a 1099 position and then you were using this deduction, you may pick up a few extra miles when you're talking to somebody from MyEcon, but that may not be the biggest deduction for you as a 1099 person. But for most people, because most people in these cities all around America are going back and forth to work every day, they drive them down the road, spending thousands of dollars in traffic every morning, and they cannot get a deduction for it. They complain about people who don't pay very much in taxes, but they say, I don't want to do what them folks doing. Them folks run a business. I don't want to run no business. I want them to give me a job, let me go to work, leave me alone, just let me be this. But then please, y'all stop getting a deduction and give me some. It ain't fair. It is fair because the rules apply to everyone who refuse to apply the rules, then the rules are still going to be the rules, and you're still going to be left out. Okay, let's go to the next one. Okay, we're going to not do record keeping tonight. I'm going to come back at a different time. Okay, interest expense. Interest expense is also in publication 463. Now, when you drive your car, you can take interest car if you take either one of the expenses. If you do it by the actual expense or by standard mileage, you can still use interest. So now, here I'm looking at publication 463. In the broken box, you see, it says, if you are an employee, you cannot deduct any interest paid on your car loan. This applies even if you use the car 100% of the time for business as an employee. However, if you're self-employed, so when you come in MyEcon, that now puts you in the self-employed category. And you use your car in your business. When you leave home and stop, you now have conducted business. You can deduct a part of interest expense that represent the business use of your car. For example, if you use your car 60% for business, you can deduct 60% of interest on Schedule C. You cannot deduct a part of interest expense that represent your personal use. Now, let me give you an example again. I used an example. They say it's 60 here, but I use 75, so I'm going to stick with that for a moment. Let's say that you have a car note. The car note is $500. On that $500, $300 of those is interest. At the end of the year, between now and the end of this month here, January, that business should send you what's called a 1099. So you got $300 times 12 months. You have $3,600 of interest that you paid on that car. It should send you a miscellaneous 1099 telling you how much interest you paid on that car. Now, then when you look at that, if you paid $3,600 a year, $300 a month times 12, now if you drove the car 75% of the time for business, $2,700 of the 36 would be a tax deduction. Because remember, you drove the car 75% of the time. If I use the number they have here 60% of the time, I still got 3,600 times 60% of the time, that's 2,160. So here's the thing, ladies and gentlemen. If I drove it 90% of the time, no one is going to believe that you drive your car 100% of the time for business if you don't have other vehicles that you drive sometime. We own 3 vehicles. So when we fill out our tax at the end of the year, our preparer want to know, what was your commuter miles? What was your personal miles? Because they know we went somewhere besides business. Now for my car, I generally drive my car 97, 98% of the time for business. My wife's car, when we go other places, we generally take her car. And then we have a van we use from time to time when we're doing other stuff that require the van. Now, I'm not saying this because I'm trying to give you an idea of how this works. So now here's the deal, ladies and gentlemen. Here's the deal for you. You got to track this. Again, we're going to get to how to track it in the next couple of weeks. But you got to track your expense. I'm going to show you how to track your miles because that's going to determine how much you use it for business. For the actual payments or for interest payments. You must understand, you can use that. So now in your car, you got a car note. You track that car note. Let's move on now. We got another publication here, 334. This is also going to talk about interest. Going to show you different types. Let's read right here, interest. You can generally deduct as business all interest you paid or occurred during the tax year on debt related to your business. Interest related to your business, if you use the proceeds of a loan for a business expense, it does not matter what type of property secured the loan. You can deduct the interest on the debt only if you meet all of the following requirements. Now, this is what it requires. You borrowed money for your quote-unquote business. You borrowed money for whatever reason, and you took it and used it on business. These are the requirements. You are legally liable for the debt. So if you went to a bank and borrowed money or a credit union or something like that, we all know you're legally liable for it. If you borrowed from Junebug, I don't know if you're legally liable. They ain't gonna go with that. Both you and the lender, intended that the debt be repaid. See, when you borrow from your kinfolks, I done loaned plenty of money to kinfolks. Getting paid back is a little difficult. Then writing it off as a deal, that ain't gonna work. So what I would tell you is that's probably not gonna happen, that you're gonna be able to write that off and say, woo, I charge some interest. You and the lender have a true debtor credit relationship. Now I think that one right there rules out the family member. Because you and the family member, unless you happen to be a owner of a bank or some kind of a lending institution, y'all probably don't have a true debt creditor relationship. You cannot deduct on Schedule C or CEZ interest you paid on a personal loan. So if a loan is part business and part personal, you must divide the interest between the personal and the business. Okay. So they go on to give an example here. 2015, you paid $6 interest, which is kind of what I just did for you a minute ago. You use the car 60% of the time for business, 40% of the time personal. You are claiming actual expenses on your car. You can only deduct $360, 60 times 600 for 2015 on it. The remaining interest of $240 is non-deductible. What if you borrowed money to buy furniture for your office? You got an office in your home. You borrowed money to buy that furniture. I have an office in my home. I'm in it right now. This furniture in my office, I do not use for any other purpose. I do not use this office for any other purpose. My wife, because she is a part of my business as well, have an office at our home. We do not use her office for any other purpose. So we can write off the furniture and the stuff that we have here. So if we borrowed money to buy this furniture, then we would be able to write that off, the interest on it. But let's say we borrowed money to buy furniture for the whole house. The only interest we could write off is the part for the office. We wouldn't be able to write off interest on the other furniture because the other furniture is not business related. If we bought computers and we had interest on those, you divide that by how much time is personal, how much is business related. If you only use the computers in business, you can write it all off. However, if you use it for other stuff, you cannot. So that's interest. One more, then we're going to take questions. Communication expense. Again, publication 535 right here. Publication 535, Department of Treasury, Internal Revenue Service. So, let's take a look at publication 535. This one is fairly sweet, but we're going to go through it. Utilities, business expenses for heat, lights, power, telephone service, water, sewer are deductible. However, any part due to personal use is not deductible. Telephone. You can deduct telephone. You can deduct the cost of a basic local telephone service. Excuse me, let me back up. You cannot deduct the cost of basic local telephone service, including any taxes, for the first telephone line you have in your home, even if you have an office in your home. However, charges for business long distance, phone calls in on that line, as well as costs of a second line into your home used exclusively for business, are deductible expenses. Let me talk to you about that before we get into questions. Okay. This is kind of written back to the days when you had local and long distance phone service in a home. Today, that don't really happen. So back in the 80s when I got in business, remember then, nobody had cell phones. You had these high long distance rates. What I did is I had 2 teenage children. So I, like many other folks back in the day, I bought a separate phone in my house for my children to use when they wanted to call their friends. And I had my regular line with long distance and everything on it for business. Because we did not use the line much. My children they used it, my wife used it every once in a while, but primarily the children was on it all the time. We couldn't write that off. That's a local phone line. But we could write off our business long distance and the second phone we had in our house because we used it for faxes and everything back in the day. We had a Sky Pager, which was only business. We wrote that off. Well, let's bring that forward to today. In my home today, I have a Magic Jack phone that I pay $35 a year for. Everybody related to our home, our church, any business relationships we have, if they get a phone number from us from home, we give them that number. People call us on that number every day. That is our home phone number. I have cell phones that my wife and I both use. We use them primarily for business. And every once in a while, we talk to our children and each other on them. But we use them most of the time for business. So we write off most all of our cell phone use. Then I have a second phone line in my home that I'm talking to you on now. That I pay $12 a month for a VoIP. It ain't no local basic. It's just $12 a month. It's called Basic Talk. I pay $12 a month for it. I'm talking to you on that phone now. I write that whole phone off and most of my cell phone off because my home phone that I do not write off is the $35 a year for Basic Talk. It is a separate phone line. It is a VoIP phone as well as my Basic Talk is a VoIP phone. So that is how I do my telephone today. Because I am working from my home, my internet service is in my home exclusively for the purpose of us doing business at home. If we were not doing business at home, we wouldn't even have to have internet at home. Because as many of you already know, my wife and I ain't all over social media. I'm trying to learn to be more active on social media. But we're not on social media 24/7. We're not on there 10 hours out of a whole 7-day week. So we don't use our internet service the way that most people do. We use our internet service for business purposes. So we write our internet service off. Now, another service you can write off is if you use your smart TV as a presentation deal. A smart TV can go directly to the website. And now, because it goes to the website, it is going through your internet service there in the home, through your cable TV and all that. So now, because of that, we can write off that cable, that TV we're doing there. We're doing that presentation. You can see the 7-minute video on our opportunity right over the TV. So now all of a sudden we can write off the internet and cable TV here. Folks, these are things that you can do. Well, if you were to add up, and I don't know the exact number that we have here, but I think we pay probably $75 or something for internet service here at home. Then on phones, between the two of us, we probably paying $100 a month. Then when you take the $12 a month times that, so let's just make math easy. Let's say that's $200 a month. That's $2,400 a year that we can write off additionally. Now just think about something. If you're trying to do business, not if you just telling tales, but if you're trying to do business and you can write off your mileage if you are trying to do business and you have a car note with interest on it, you can write off your interest. If you are trying to do business, now you can write off cell phone, internet, cable TV. My question to you, just on those three alone, you're going to come up with, in many cases, well over $10,000, $12,000 in tax deductions. Some of you remember, and if you do not remember, go back and look at it. I have them posted already. Go back and look at it. If you do not remember, when I posted, or when I did the W-4 training class, when I did the W-4 training class, I told you the more tax deductions you could come up with. On the back side of the W-4 where it says adjustments to income, that number could increase. So if you want to go back and look at the W-4 training, it will tell you what I'm saying now. I cannot go back and do that tonight. That's why we do this in stages. But on the back side of the W-4, at line 4, adjustments to income. This is how you get adjustments to income. Business expenses that you turn into your personal expense that you turn to business expenses. Now, the more of these you get, the bigger line 4 will be. The bigger line 4 is, the more withholding allowances you have. The more withholding allowances you have, the less they take out of your check. The less they take out of your check for federal income taxes, the larger your check is. Now, if that check is $300 more, you take that $300, you apply it to a bill. You shifted income from your taxes to paying off a debt. If that check was $500 larger per month, you wanted to invest that for your retirement. You shifted income from the income taxes to pay off the debt and or either to invest. If you want to invest that or give that as tithes and offering, you take that money, no matter how much it is. Now, this is 3 of them, ladies and gentlemen. We got 4 more to go next week. When we get into these other 4 next week, you're going to see, if you watch this carefully, how you can come up with $15,000, $20,000 of tax deductions by using ordinary expenses that you have every day, turn them into tax deductible business expenses. And I need to reemphasize this. It is not because you joined MyEcon. It is not because you said, I don't want to do nothing. If that's the case, this won't work. It does not work like you think it works, if that's how you think it works. You have to make a legitimate attempt at earning a profit in this business. It didn't say you had to make a profit, but it did say you had to make a legitimate attempt. And I believe that the IRS is smart enough to figure out if somebody make a few sales on a year, get a few customers, that they trying to build a business and they not. Now, folks, we're going to get into some more next week. And in those, we're going to show you how to get another $10,000, $12,000 in deductible business expense. And for the vast majority of you on this phone, that'll be so many deductions for you, you will have very little to no taxes that you have to pay. So what I'm going to do right now is, if you would give me a few minutes, I'm going to turn the recorder off, and I'm going to turn the mute button on so you can unmute the phone and we can talk. You must ask me questions related to what I talked about tonight. I will answer all of those questions first. And once I finish, then I'll go back and answer any question about MyEcon you want me to answer. But if you ask me a question about something unrelated to what I talked about tonight, I am not being rude when I tell you I'm not going to answer. I'm telling you now I'm not going to answer. That's not being rude. But we have to finish this class up first. And the way we finish it up is we take questions on this first. And then after that, I stay on the phone as long as you need me to and answer any other questions you want me to answer. My name is Alvin Curry. and I thank you for being on the call tonight. If you feel like you have everything you want or need, you can go ahead and hang up the call tonight. It will be posted by probably tomorrow night. You can go ahead and hang up if you want to and come back and listen to it at any time you want to. Again, thank you for being on the call tonight. Have a good night. And if you're going to stay on for a question, I'll be with you in just a second.